Hey YouTube, what's going on? It's your boy TriniFX here, back with another trading recap. Alright, so today is the first trading day of the month of August. We're looking to see how this month will go. We got a winning trade today. Took one trade, actually two trades today. One on my personal account and the other on my funded account. So we'll go through the recap. Just let me show you the execution on my personal. This is where I got in, and we'll get to all of this in the price chart. So starting off on a higher time frame, we can see Friday. This is Friday's price action. We got the high and the low from Friday. So one could say, this could be our dealing range. And what we saw, market closed here on Friday, and we had this big new week opening gap. Price opened higher. We traded up. We traded back into this 1 hour SIBI. Price couldn't take out last Friday's high. And in Asia, we more or less traded higher. Midnight open, traded lower in London pre-market. And what I want you to notice is that we actually had this SIBI last week Friday. Price traded up, couldn't break through. The wicks broke through, but the bodies closed inside of this bearish fair value gap, and we closed lower. So when price opened and we opened higher, this became an inversion fair value gap. So you drag that across, and we could see if price will utilize that for some support later on. So it was resistance here, and as we could see, price came down, more or less filling the new week opening gap, but the bodies couldn't close below consequent encroachment of the inversion. Yes, we traded lower and just about closed in the gap. We just had a little way to go again, but 75% gap closure. And when we go to a 50-minute time frame, we'll see it better. So midnight we traded lower, and ultimately we rallied, and let's get into that. So dropping to a 15-minute time frame, what could we have framed today? Right, so what I did, I graded the close to the open. So this is the new week opening gap. Price closed here, and upon market open gapped higher. So I graded this entire gap, so we could see price traded lower, and 9:30 opened. We already closed 50% of the gap. So 9:30 opened and we traded lower. We didn't close the gap fully. So upon seeing price trading lower, I was dropping to my 5 minute to see, if there was a lower time frame PD area that price could have traded into, and caused price to run higher. So I was anticipating two things. Either price traded lower, closing the gap in full, and then reversing. When I dropped to the 5 minute, however, I saw this 5 minute SIBI right in line, and remember, this is the 1 hour inversion here. So what ultimately happened was price traded lower, found some support in the 5 minute SIBI, closed outside of it, and was respecting the 1 hour inversion. So dropping to my 1 minute time frame, for us to frame an entry here, and we'll get to all the markings on the chart here. Right, so price opened up. Well, before we opened, we traded higher into this 1 minute SIBI, rallied down upon market open into the 5 minute fair value gap, couldn't close below it, and we began to displace higher. Once price traded above this inversion fair value gap, I classed that as my market structure shift. And this is my market structure shift here. So I allowed price to trade higher because what I was waiting on is a retracement back into at least 50% of the leg. and we could see price actually came back into 50% of the leg. So let me take this off because there's a lot going on the charts right now. So price came back down into a discount. And what PD areas do we have? We could class this as our breaker because it traded lower, higher, lower, low, broken. So we mark this off as a breaker. We had the inversion fair value gap, shift in market structure with displacement, and price return into a discount into this 1 minute BISI. So all those are the confluences that I look at. And if you look at price never closed below consequent encroachment of the 1 minute fair value gap, nor did it close below the consequent encroachment of this inversion fair value gap. And if we were to add even more, we had our first presented, this was our first presented fair value gap. So all those PD arrays gave me more confidence that we were going to reverse in New York and head higher to take out Friday's high and continue trading higher. So we traded down. I was waiting on a confirmation entry. So once we traded higher and we closed above the candle that traded into the 1 minute fair value gap, as you can see, that's where I took my entry, placed my stop below the candle, the fair value gap candle. Now, we sat through all of this, guys. So what I did to just see if I was onside or offside, I dropped to my 5, but I went back up to my 5-minute time frame, and I want you to pay close attention to this wick. This wick, after we went long, this wick, I graded this wick on a 1 minute time frame, and I wanted to gauge the strength of price delivery. So if we looked at ICT's teaching, I believe it was last week, where he grades fair value gaps and wicks just to gauge the strength of price delivery. If we zoom in here, I graded the wick from high to low, and what we could see one, it formed a 1 minute fair value gap again. So we stack in the confluences here, guys. Breaker, inversion fair value gap, inner discount, shift in market structure, price trading back into a 1 minute, displacing confirmation entry, and then creating new bullish fair value gaps. All those are things that we look for in price to see if we are onside or offside. So the mere fact that price wicked down, closed back above the 50%, and then could not close below the 50% of that wick gave me more confidence that price was indeed bullish. So once we had this close, I pretty much knew that, we were onside. And if we look to our left, what do we have here? We had this down close candle, this SIBI. I dragged that across, and we could see that was causing some resistance. So this SIBI acted as resistance initially. Once this candle closed higher, closed above the consequent encroachment and traded above, I treated this as an inversion fair value gap, and that gave me confidence to have my second entry as I got out. So I just was going for a 1-to-1 here on my private, or my personal account, I should say. So when it reached 1-to-1, I exited the trade, and I was waiting to see if price will just deliver to buy side, or if it'll give me some sort of retracement, and it did. I traded back into a 5-minute fair value gap. It was also a 1 minute fair value gap, and then we had this inversion fair value gap. So price traded down. Once we closed above, that was my confirmation entry. I went long there, and I also recorded this trade here. So after you watch this video, guys, you can look at my shorts and you can see the live execution. I got in here, stopped below the 1 minute fair value gap, and I exited On the buy side liquidity, which was Friday's high, ultimately price did trade higher, but that was the target. Took partials along the way. So those were the two trades for today, guys. It was a good start to the week. What I want us to take note of is one, we have our higher time frame bias. We must at least anticipate where price is going, whether it's going higher or lower. Use the 15-minute time frame as a barometer on price. Price reacts to new day opening gaps, new week opening gaps, gaps in general. So it's not really, people will say, well, we have this strategy, and if you follow my strategy, you'll be successful. That is temporary because you may find success for a long time and then it doesn't work. And then you want to know why. It's more than a strategy, it's understanding how price is delivered, the different PD arrays, the algorithmic theory that price follows. As ITC always says, this is technical science and you have to understand it on a micro level. So that's why we could have precise entries on a 1 minute time frame and find success. So guys, I hope you found some value in this video. Like the video, subscribe. Let me know your thoughts in the comment. How was your day? How the week started? And I'll see you again tomorrow. Stay safe, guys. Bye-bye.